Hello. Today's podcast is about the tiny silver market. Could someone buy all the available silver that there is? And today we're going to give an illustration of how small the silver market is. Obviously, you've probably already determined the answer is yes, they could, but we'll see why they can't. All of the available annual global silver mining production at current prices of around $20 an ounce could be purchased for less than $10 billion. Pocket change for a lot of people, but there's no way they can get at that silver, and we'll show you why. Earlier this year, Rory Hall and I from the Daily Coin discussed a hypothetical. What if 1% of the US labor force saved in silver? And we realized that if that were to happen, silver, the available silver, would quickly run out, even if just a small percentage of the U.S. labor force, which is shrinking, as you know, those that are actually working. But if those workers were to buy 1 ounce a week, 1 ounce a month, 2 ounces a month, 3 ounces a month, you can see by the chart here, very quickly, that would run into some very large numbers. And if it goes to 4% of the U.S. labor force buying a few ounces a month, or 72 ounces a year, which is not that much at all, it would eat up more than half of the annual global silver mining production of about 900 million ounces. It would equate to 450 million ounces. I don't want to belabor this point. You can check out that podcast at this link, what if 1% of the US labor force saved in silver. Today what I want to talk about is what if instead of that demand coming from just a small number of U.S. workers buying silver, what if a guy or a group of people, investors, decided they wanted to buy as much silver as they possibly could? Well, as much as you can possibly buy is what's available. How much could they acquire, and how much would it cost them? The answer to both questions is not much. So in 2015, global silver mining production increased to about 900 million ounces. I think it was 887 million ounces. So according to Silver Institute and a number of other agencies or organizations that count the silver that's mined in a given year, they all came to the conclusion that silver mining production globally indeed went up to about 900 million ounces. A little bit under that. And where did it go? Well, most of it went to industry, about half, about 52%. But 10 years ago, about 70% of silver that was mined every year went to industry. You can see here, but the amount that went into coins and bars back in just 2006, you can hardly see it here, was only about 5%. That number has risen to about 22, 23%, which is eating into the amount of silver that's available for other uses like silverware, and industrial uses like for solar energy and for electronics. And as you can see in this chart here, the investment demand has gone from basically nothing back in 1995, year 2000, 2005, to eating up a significant pie of the silver, of the overall silver that is produced every year. Now remember, silver, as we'll see later, there's really not many known stockpiles of silver. It's kind of a just-in-time commodity where it gets pulled out of the ground and immediately shipped out to industry or to silverware manufacturers, jewelry manufacturers, and to mints to produce coins, rounds, and bars. And as you can see, over the past few years, the amount of silver that they pull out of the ground versus the amount that has to be used to satisfy industry, jewelry, and coin and bar demand is in deficit and has been for a number of years. How much is a year's worth of global silver mining production? So what I did was I took the annual global silver mining production of 2015 of about 900 million ounces, multiplied it by current price of about $20 an ounce, and you'll see that'll get you to $18 billion. Not much money. In fact, JP Morgan paid nearly twice that amount in fines between 2011 and 2015. And Bill Gates is worth $80 billion. So you see, the entire amount of global silver mining production in a given year, even at a record year, like last year, a recent record year, it's not very much money. It's worth $18 billion. Now, of that 900 million ounces that were mined last year, about 450 went to satisfy industrial demand, and that leaves you just 450 million for investment demand in jewelry, and that value is only about $9 billion. You can't go and buy the full production because a lot of that's already spoken for industry, and they're not going to give that up. So $9 billion is about what's available for investment. You'd have to eat into the jewelry, and you'd have to eat into the amount earmarked for silverware, but there's only about $9 billion worth of silver available for you to go out and buy, for an individual or a group of investors to go buy. Now, according to Forbes 2016 list of richest individuals, there's 122 individuals with a net worth over $9 billion. So if they wanted to liquidate their assets, and assuming all that silver was available for them to buy, they could write a check for $9 billion if they could get it, and they can have an entire year's worth of silver mining production. But how would someone go about, this is the problem, getting all that silver? Well, the first thing they can do is they can go directly to the mines. Here are the top silver mining countries in 2015. Mexico is the largest, just under 200 million. Peru follows with about 125 million. China, about 100 million ounces produced in 2015, a little more in 2014. But China, that 100 million ounces, no investor is going to get their hands on that. That silver gets mined in China, stays in China. So that means that instead of having about 900 million ounces a year that is available to purchase for industry, for jewelry, silver, and coins, there's really only about 800 million or slightly less. So you can go to the mines, mining countries, and you can try to buy that silver. And basically, the top 10 silver mining countries produce most 83-85% of the silver in the world. So where it is, it's not hard to find. It's concentrated in basically, if you hit up Peru, Mexico, China, Russia, Australia, Chile, Bolivia, Poland, the US, and Argentina, you got an eye on most of the silver that's produced in a given year. Now, if you can't get it from the mines because it's already spoken for, you can go to the known stockpiles. Now, central banks don't hold silver. There is silver at COMEX, or supposedly there's silver at COMEX. I believe that there's silver that's registered, which means that it is in a form, there's eligible silver and registered silver. Eligible silver is in a form that can be sold and traded on COMEX and delivered in large bars. And registered is that which is readily available right now, that if someone wanted to, quote, stand for delivery, they can receive that silver. Now, there's apparently 150 million ounces, approximately, of silver in the COMEX warehouses that is eligible to be sold, but not necessarily registered. I think there's about 25 million that you can buy right now that is registered silver. Now, to get at this silver, you would have to buy contracts and then stand for delivery, which is a sure way. If you try to buy the 150 million ounces, first of all, there's not even that much there that's registered. There's only about 25. But if you wanted to, and you tried that stunt, you would, first of all, it's a surefire way of boosting the price of silver, and perhaps ensuring that you never ever get your silver, because that would cause a run on the COMEX silver, which in a sense lead to a default, which is never going to happen. I'm not going to get into why. That's a foolish ploy to try to get as much silver as you want by trying to get at the 150 million ounces that happen to be at COMEX. You can read why COMEX won't default. The COMEX exchange will never allow a trader to bust COMEX and get at all those ounces if they didn't want the trader to do that. So you could forget about those 150 million ounces. They're out of play, basically. Or you can try to go to the silver exchange traded funds. Now, there's a good chunk of silver there. There's about 600 million ounces of silver in the variety of ETFs, of which SLV is the largest. It has about 350 million ounces in there, and there's 600 million in total. But again, this is an area where you cannot go in and get at that silver. You can buy all the shares you want of these ETFs, and you can try to get delivery of that silver. But there's been many cases where the people that own shares, they meet the requirements for delivery under the ETF, and they just never get it. So basically, whatever is in silver ETFs, whatever is in COMEX is basically silver that if somebody was trying to grab as much silver as they can get, is not going to be able to get at that. Now, getting at silver from the miners, good luck with that too. So the only way anybody could ever even try to buy even a slight portion of the annual global silver mining production, they'd have to buy it directly from the mines, and they'd have to go through brokers and dealers and try to get as much silver as they can. But because the market is so small and so tiny, any increase, just like we saw with individuals trying to buy small amounts, any individual large investor trying to buy large amounts is clearly going to be felt in the physical market, meaning that it would put a strain on supply, because the 450 million ounces that are required by industry, that doesn't go away. So when somebody tries to buy 100 million ounces of silver, well, it has to come from somewhere. And COMEX can do all the playing around what they want with pricing, with paper contracts, and they can create more supply if they wish and do more shorting. But one thing is for sure, out of the 900 million ounces that get produced each year, 450 million must go to industry. You cannot put a COMEX contract in a solar panel. You can't put ETF silver shares into an electronic and expect it to work. So the point about making this video is silver is such a tiny market, and silver is required to be physically delivered for industry. The industry cannot be satisfied with financialization and digitization of their shares. They cannot put what's on their screen in electronics unless they actually have the silver and the right to take it and put it in the machine. So if in people who wanted to invest in silver, rich investors, and they didn't want to buy shares of ETFs and they didn't want to trade COMEX contracts to get price exposure, but they actually wanted the silver, that's when you can have a position where you actually have physical supply tightness of silver. So I think we're at a point now where if there's enough interest in silver, we may see that occur, where there's actually what people call a shortage, not just the type of shortage we had last summer where they didn't have enough blanks in form to make coins, but actually not enough silver for investment purposes because the investment demand has grown. And just to recap, if you look at how investment demand has grown, this was as of 2015 when you had 23% of the global silver mining production going to coins, bars, and so on. This year in 2016, the demand has increased about 20-30% from last year. And that's all from retail investment. If you throw in India or just a few individuals who want to get more exposure to silver, but not through ETFs and not through COMEX, that's where we may finally get the much talked about, much hyped silver shortage. Thanks for listening.